Welcome back to CMC Markets Trend Tracker series. A lot has changed since our last video, in particular with the yen, gold, and Aussie, and they're the products that I'll be analysing today. Let's get straight into those charts. First up, we have the dollar-yen chart. It's been a huge week last week with the Ministry of Finance instructing the Bank of Japan to intervene and support the ever-weakening yen on their behalf. Now, the US dollar versus yen dropped a massive 700 pips, 4.5% over the week on the actions of these authorities. Now, what the Japanese authorities have done is they most likely have sent a temporary ceiling in dollar yen around 160. Furthermore, US non-farm payrolls data was weaker than expected, and as a result of that, we've seen a sustained weakness in the US dollar across the board on rate cut hopes. So they've been revived once again. Now from here, markets are starting to bring forward Fed rate cuts. And if this scenario continues, then the dollar yen's upside may be limited. And that is what we're seeing on the charts right now. Also, one thing about intervention is that it rarely has long-lasting impact. The Ministry of Finance and Bank of Japan has achieved some success in not making dollar yen a one-way trade that it has been for the majority of 2024. So technically you can see here dollar yen does remain in an uptrend with prices pulling back from their lofty heights to the 50-day EMA. You can see down below there the sharp drop in stochastics oscillator also suggests that momentum is down and that sellers are most likely to be attracted to any small bounces going forward. So remember, you've got a fundamental picture which suggests that dollar yen has topped out around 160, and going forward, support levels 152.50, which is a 50 EMA where prices have halted for the last few trading sessions. If we can crack there, 150, and then 148.70 as your supports and targets on the downside for sellers. Top side, that 160 has become a bit of a line in the sand at this stage. On the news front, pretty light in terms of data this week. Next, we have the gold chart. Now, there are two factors at play here. One is US dollar movement, which has been softer of late, and two, the ever-present situation in the Middle East. Now, most recently, gold has gained on softer US dollars on rate cut hopes after that softer than expected non-farm payrolls data on Friday night. But in addition, last 24 hours, Hamas has accepted a ceasefire deal brokered by Egypt and Qatar. However, that has not been accepted by Israel as yet. So we're in a bit of a quandary at the moment where Middle East situation remains tense, and looking forward for gold prices from the fundamental viewpoint, if the market continues to look ahead and bring forward rate cuts in the Fed, I think the US dollar weakness will likely be the main factor affecting gold prices, and therefore that's going to most likely support gold in the days and weeks ahead. And the technical picture does support that as well. The 50-day EMA has been quite a strong level of support across 2024. You can see here the uptrend remains in place with the 20 EMA in yellow above the 50 EMA in blue and regaining momentum as stochastics oscillator bounced out of that oversold territory. So from here, the trend is strong. It's an uptrend in gold. Support levels, which would likely attract buyers and in dip, is the 2,250, which is a 50 EMA. We do have support down at 2150 as well, horizontal support, which has not been tested since mid-March, but they're levels which are likely to attract decent demand. And topside, keep an eye on the recent highs made on the 12th of April, 2,431 US an ounce. Next is the Australian dollar chart. I'm recording this video just prior to the RBA meeting this afternoon. Now, the Aussie has attracted risk-on flows as major US indices rose over the last few weeks. Friday's lower than expected US non-farm payrolls, in particular, bolstered Fed rate cut hopes. So the US dollar's weakened. As you can see on the chart, the Aussie's gained against it. Comments from the RBA's bullet will be watched closely today. Now, the money markets are expecting no change in the cash rate in Australia, 4.35%, but it's what is said in the Q&A this afternoon. Now, recall last month, Governor Bullock repeated that she wasn't ruling anything in nor ruling anything out in terms of rate cut or rate hike. I expect that the governor will continue to have the same narrative in the Q&A. We would expect that the governor highlights the uptick in Australian inflation last month and also softness in recent employment data. Now, with that in mind, you've got a fundamental picture there where it's leading towards most likely further US dollar losses and perhaps Aussie strength. And technically, the picture here is one where the Australian dollar against US has closed right on that key resistance zone of around 66.20.30, but it has failed here so many times throughout 2024. So this is not a clear-cut sign as yet that the Australian dollar is a buy against the US. We're right on resistance at the moment. So comments today are key. Now, the trend is sideways on the daily chart, as you can see, with the EMAs in yellow and blue touching, but the fundamentals suggest possible upside from here. Now, support still remains 64.50. Resistance, if we can continue to push higher, then the next likely target and resistance level is 67.35. That concludes today's analysis. Thank you for watching, and I'll see you in the next video.